And what a way to start off the week. I hit 2 banger break-even trades. It is actually depressing. 2 break-even trades, as well as the fact that I had a very bad week last week and I ended up taking 8 losses, 1 win and 1 break-even. Yeah, man, I'm feeling good about this week, but today honestly was a complete letdown. So let's get into the price action. So as you can see here, man, it is annoying. It is annoying. You know that saying where you'd rather have your trade hit stop loss than break even, man. That is so true in this instance. Today was great price action if you could get into a trade at the right time. For me, unfortunately, I ended up fading a lot of buying opportunities around this area, and I ended up just waiting for some kind of short setup to come in. As you can see here, I ended up getting edged by 2.5 ticks. Trade number 2 comes across, it looks pretty decent. I've got pretty tight risk management, having being this high being a break-even point, because why would I risk capital when we're this far in the premium? Exactly, I'm not going to. Move my stop loss to break even. Unfortunately, we got broke even on that trade. So today's been a good trade, and what I said earlier about if you can get in at the right time, then you're kushti. It's true, man, and that's not always the instance on the markets. It's not always, if you can get in at the right time, you're calm. It's not, because today showed a lot of shade on the way the market moved. Today the market moved very sporadically. It had barely any retracements. Going into the morning, I wanted to see buys to previous week high. We'd already had a very, well, as bullish day as you can get. We had a bearish opening at range, filled it straight away, bought all the way back up, put in a London and Asia low, bought all the way up again, and honestly, off the bat on market open, I wanted to see price retrace into a 30-minute Favi gap. It did that, but as you can see, look at the amount of pressure, buy side pressure that candle has. Let's forget about New York Open, because the 9:30 candle is always going to be pretty big, but bro, look at how fast that candle got bought up. Absolute menace, but as you can see, I literally got stop rated. If I had have held my stop loss at this low, then anyway, let's completely forget about it, because it's not going to help today. So let's get into my bias going into the morning. So naturally I was bullish. I've already spoken a bit about why, but if we go on to the 30-minute charts, so we're going to start off by drawing out our draws on liquidity. So those are being the opening at range and session highs and lows, previous day highs and lows, previous week highs and lows. So as we can see here, previous week high is resting up here. We can also see that Asia and London low are resting here. What does this tell us immediately? This tells us there are 2 main draws on liquidity. Obviously, there's always going to be sell side and there's always going to be buy side, but in this instance, today, there's heavy sell side liquidity targets being session lows from today, and there's heavy buy side targets being previous week high. So going into the morning, if we've already had such a incredible move to the upside, literally selling all of that candle off in 1 minute. That was a 1-minute candle, by the way. That was like 200 points. 200 points, actually mad. So if a candle gets bought up all like that, 0 retracements practically, you can imagine price is going to continue for Asia. What does Asia do? Asia accumulates a few buys, but it also carries on buying to the upside. What does London do? London has a fake reversal. It goes down, acting like it's going to sweep out Asia low, and then it just gets bought all the way back up. Man, I mean, today was just so easily detectable, and I'll talk a bit on how you're going to get mentally like screwed in days like this. But anyway, understanding that there's a 30-minute Favi gap that's going to open up in this range up on 9:30 open, plus as 9:30 opens, there's going to be an opening gap range, because as we can see here, if price is toddling its way to the upside, we can understand that price is going to open up here, being our relative, or whatever, what do you call it? Regular trading hours. We can understand that the opening gap range is going to open up there. So I hope that made sense, but understanding that the price has a very clear probability of retracing into this 30-minute for value gap. Straight off the bat, I was like, cool. If it goes there and it has a bit of friction, I'll buy. But as you can see, we had no friction at this low. We literally just bought the motherfucker all the way up. And yeah, from that point, I actually wanted to buy into the market. I wanted to buy into the market, stop loss at this low. The entry point was right there. The entry was exactly that. That would have hit me a nice 1 to 3.2 R. That would have been such a nice trade to start off the week. But unfortunately, I didn't capitalize on it because I was a fucking pussy. Like, realistically, in situations like this, yeah, it's a no news Monday. You can expect price to continue to the upside. It's got a clear draw being previous week high, and it's just absolutely decimated any chance of bearish price action. When price action has no fucking reason to go to the downside, that is when you buy. Like, it's just fucking obvious, man. It is literally just obvious. If price has retraced below the opening gap range, rejected up, naturally you're going to buy. But I was a complete spastic today, not buying. It is what it is. I faded that setup. So, yeah. Unfortunately, I missed number 1 of the setups. Number 2 comes across where previous week high has now been swept. I end up seeing a 15-minute unfilled for value gap opening up. So if price has just swept out the MMXM buy model, or it has swept out the main buy side draw on liquidity, you can expect some kind of internal reversal. And in this instance, I was using a lot of technical analysis to plant myself in a great probable position for price to sweep out into this 15-minute for value gap. So after previous week high was swept out, I understood that we were very close to having a 10 a.m. candle opening up. So what do we understand about 10 a.m. candles? They have the highs and lows of 10 a.m. candles are draws on liquidity. So if we draw out the 10 a.m. low here, being, let's say, being black, and then we draw out the high as well, being black, you can see here that this low was swept out already straight away. You might say it's not a draw on liquidity. It is completely your opinion, but in my eyes, they're both draws on liquidity. So understanding that we've got all of this low resistance stacked liquidity here, and we've already taken London 10 a.m. low, I saw that we had a lot of friction in this range. And I was like, cool, let's just short position, stop loss at 10 a.m. high, because if this trade is going to be correct, our invalidation point is going to be 10 a.m. high, because if 10 a.m. high is swept, we have a very low chance of going to the downside. But in hindsight, it was a silly thing to think. Price ended up sweeping internal 10 a.m. high. From this point, I was like, cool, let's just go short, because if this trade doesn't work out, it doesn't work out. Like, I'm not really risking too much. So yeah, price ended up dumping down. My break-even point was right here. Price came lower, created an internal SMT. Would I count that as a valid SMT? Absolutely not, because it has no reason to hold. Unfortunately, price pulled straight back up within 2 candles to my break-even point. So trade number 1 is out the window. Trade number 2 comes along. I'll draw out this simple 5-minute for value gap right here. Hope this isn't too like boring or anything, because today was really, I'm not in the best mood right now. Anyway, price came down into this, the OTE of this newly made range. So if we draw out, OTE of the range being, do I want to remake this video? Absolutely not, so I'm not going to do it. Price ended up retracing into 50% of this range. So at this point, people who are longing here, or longing here, or longing here, they're all moving their stop loss to break even. So I just did a classic seek and destroy play. I watched price sweep out this low internally and reject to the upside. From here, price ended up creating a massive 1 minute candle wick here. It also created a 1 minute for value gap. So understanding that we have overall order flow holding bullish, we've had 0 attempts to retrace to this for value gap once it got broken through. We had 0 attempts to retrace to this one. We've just had absolute immense bullish price action. You can expect naturally this value gap is going to hold. So I go long, stop loss like at this low, take profit at this high, break even point at this high. Unfortunately, we got stopped out. So that's going to be it for today. And yeah, man, I'm not madly pissed because at the same time, I can't control what the market's going to do, but fuck, man, is it annoying to spend 75 minutes on the chart to be up a total of $37. So it is what it is, man. I did the majority of stuff I could on the markets today, so thank you for watching. Hope you've learned something, and hopefully tomorrow when I see you, it will be a much better day.